Hello friends, as discussed in our last video, somehow Bank Nifty is not exactly to a larger extent but still in a bit bearish mode. Accordingly, we saw about 0.57% loss over its previous close. Let us study first of all a daily time frame chart and try to understand the structure. Now, if we understand the structure, then with some adjustments, we can see that a bearish wolf wave structure formation is already in a place. As per this, already we can consider that fifth point is already made and chances are very high that bears may try to drag Nifty on the downside. If we try to find out probable targets on the downside, then downside targets are up to 37,500 at least at present, and more downside can be confirmed once bears manage to give a close below this trend line. So as per this structure, bearish mode may continue for the next trading session, but for that let us try to understand what is exact structure as per the swing. Now if we consider swing data, that is from the last high and a last low made, and we apply Fibonacci, we can check out that somehow a golden Fibonacci ratio is still bit far, and we can consider that immediately 23.6, that is near to 38,700, or you can say that 38,600 is going to act as a support. Below that we can see prices going down to a lower levels near to 38,300 or near about levels as per Fibonacci golden ratio. So again we can say that a downside support or a downside move can be expected if at all we see bears managing Bank Nifty spot below 38,700 as a whole. Now if we apply short term moving averages, then still negative crossover is yet to take place, which is about to signal that downtick may come in. So at present, as per moving averages, downside is still not yet expected. This can be expected once if bears manage to give a close below last trading session low, which is near to 38,600 to 38,500 zone as a whole. In fact, to make the things easy, we can consider that if the last trading session low, that is near to 38,560, if gets broken on a closing basis, we can expect some downside. So as per the daily structure, majority of the things that we have discussed, downside may continue except the moving averages. Now if we follow 1 hour chart, then as per this structure, we can see that a gap that was formed between our previous to previous trading session and a budget day trading session got filled. So we can consider this was just a gap filling process, and again bearish mode may only continue if bears may drag Bank Nifty below 38,550 or previous trading session low as a whole. If we try to apply RSI, then RSI at present is in a bearish mode, but somewhat care should be taken. Reason being simple, last time RSI bounce was from near to 40 levels, near to 48 or 45 near about levels. So RSI double bottom may happen. So RSI indicator as a whole should be avoided at present. If we apply Bollinger Band, then again we can consider that Previous trading session low was near to our lower Bollinger Band, and this structure may get changed like this only if previous trading session low gets broken. So again, as per this theory, previous trading session low is important. Now if we check on a 15 minutes time frame, then some bounce was seen from the lower levels or from oversold zone in the last trading session resulted into the bounce. But this bounce got holded at a 20 SMA on a 15 minutes time frame, which is nothing else but our lower Bollinger Band. Accordingly, if we can consider what can be the major resistance, then major resistance can be considered at 38,900 or near about levels. For that, let us try to draw some trend line at that level. We can see that previous support acts as a resistance is completely getting valid as per this. We'll try to highlight this in a simple way. This was a support, but here it acted as a resistance 2 times. So somehow this particular level may act as a resistance, and bulls need to work hard, and if at all they are managed to lift it up, then somewhat up move can be expected. So as per the smaller time frame analysis, 38,900 or near about levels can act as a strong resistance. This should be considered on a 15 minutes basis after our first 15 minutes, that is from 9:30 onwards. So whole in soul, as per the chart structure, important thing that needs to be noticed is 38,900 and 38,560 is a crucial level with a leverage of 15 to 20 points on a 15-minute time basis, which may consider our further trend or momentum. Just for a final time, let us try to check out again a daily chart and try to see what can be our next support as per 20 SMA or Bollinger Band. As per this, we can see that a support may come near to 38,150 or near about levels. That means support is bit far on a daily time frame. Please make a note, Bollinger Band breakout cannot be considered in this. Reason being, we had a good wild swings, and Bollinger Band breakout can only be considered only if it comes out of a consolidation mode. Now let us try to study option chain data. Option chain at present is giving a good hint that 38,000 may act as a strong support, which is about 800 points far from the last close. Prior to that, 39,000 may act as a support, but that particular strike price is already in the money, so it makes no sense to consider that as a whole. In fact, our eyes should be glued on 38,500 PE and its change in OI in the next trading session, because if that may act as a support, we may see some bounce, but somehow 38,000 strike price put option can give us a good idea depending upon the change in OI and its price action. If we consider on the upside, then 40,000 is going to act as a resistance. 39,500 is again going to act as a resistance. 39,000 in fact is also having a good OI. So overall we can say that resistance are bit stronger than supports as a whole. So this can be considered that every rally, that means every bounce, may get sold into, and we can see some downside momentum as a whole. If we consider Max Pain data, then Max Pain data is at 39,000, underlying is already closed below that, so somehow again this gives that every bounce may get sold into. PCR at present as per the OI reflects that at present OI on a PE front is comparatively lesser and on CE front it is comparatively higher. That means chances are very high that a good CE writing has taken a place at a higher level and probably every bounce may get sold into. Now if we compare PCR as per our volume, then it is at 1.12. That means good CE writing has again taken a place in the last trading session. So again over here same thing is getting cleared that chances are really very high that every bounce may get sold into. As a conservative trader, one should keep an eye on 39,000 strike price call option as a whole, and on a lower side 38,500 put option. And to make a best benefit out of it, one should also keep an eye on not only put option but OI and change in OI as well. We hope this video is going to help you to prepare your trade plan and trade accordingly. See you soon with another video. Till then, stay safe, take care, bye bye.